Pleased to welcome back to the show Paul Beatty, BT Global. Had a terrific, this is a terrific fund, by the way. I was looking at its track record going right through up until May of this year from its inception over 10 years ago. And it's doubled the rate of return, more than doubled the rate of return that you would have got from the TSX index. Paul joins me again. Paul, I do appreciate you finding time for us.
Thank you for having me out again, Michael.
Let's start with one of the big news events this week, which was the Federal Reserve raising interest rates. I mean, obviously it was widely anticipated. What impact do you think that this has on the market? Do you just completely ignore that, or you factored it in long ago?
Well, a good question. I mean, we don't spend a lot of time looking at it because, as you know, it's very well broadcasted, and lots of experts focus in on this. The bond experts, and the Fed's going to do what it's going to do. I think they are going to raise rate. I mean, they've hinted to that, and the Canadian government's doing the same thing now. I think they need to raise rates because they're, far too low, and I also think they need to sort of save some ammunition for the future if we do head into a recession a year or two down the road. So I think it's okay. I mean, I don't think there's any big problem with raising rates 100 basis points or something. So we don't spend a lot of time on it, and I don't think it's going to affect stock prices that much.
Well, one of the things you do is in BT Global is you look at the big picture first. I believe you start with that big picture, to identify where the growth investment themes are around the world. And what are you seeing right now?
Well, I think as strange as it is, the whole cannabis area here in Canada, we're not heavily invested in this area. We're by no means experts, but we've met with probably 25 companies that have come through Montreal and sat down with them. And one thing is very clear is the Canadian industry is going to have a big head start on not only the U.S. but also internationally. And I think it's going to be fascinating. So you're going to be able to raise capital in Canada and put it to work, not just for the Canadian market, but we think the next wave is going to be the U.S. market, and then globally. And we're getting quite excited about some of these global opportunities. And I think, we know you're going to be able to raise the money in Canada. So I think the world's going to come to Canada to get financing. And forget the recreational business. How about just the medical? That could be a huge, huge business internationally. So we're watching that industry. And the gold industry, I think we should talk about that a little bit. I think there's some great opportunities in the gold space these days. Again, because Canada's got some expertise in that area, and there are not that many Canadian gold companies left, right? So what you do is you play the international names financed here in Canada.
The other thing, and I'll come back to that in a sec, but I just also want to get to the zinc market, because last time you were on, you made a couple of recommendations here. One that jumps out at me is Trevali Resources, which was under 35 cents and has zinc mines in Peru and New Brunswick. And then, talk about a winner. Within about 2 months, the thing was over $1.57. It's backed off a little bit from that, but I'm just wondering what you think there.
Well, and it's amazing. The global zinc demand has been fairly steady and rising, and global zinc inventories have done nothing but go down. Logically, you'd think the price of zinc would be much higher. Again, we're not experts in this by any means, but we don't really understand how low these inventories can go before zinc does have a run, and I expect it to happen. It may not happen till the fall, perhaps, maybe next year, but there's so few ways to play zinc. It makes it simple. Just buy Trevali and stick with it. Yeah. And the stock's not expensive. I mean, by any means. I think it's, let's call it 6 times cash flow and a growing company and good management. So makes it simple. Buy Trevali.
Well, we had a big bump in the commodity index, over the last while, but recently it's dropped back down. I think it's down about 9% from the year highs this year, and that's despite the fact the U.S. dollar's fallen. I think about down a chunk too. What's your take on that? And you can get more specific than this broad-based question, but what's your take on the commodity sector?
It's a good question. I don't know. I mean, I think The share prices are volatile. That is for sure. I mean, our First Quantum goes up and down, 20% a month, and Tech Resources, one of our other larger companies, I think it was down quite a bit this last week. I think a lot of the volatility simply has to do with big investors coming in and out of the Canadian market, and it shouldn't be this volatile, but it is. It's I can't really tell you where it's going to go. I suspect over the summer everything's going to continue to be volatile, and probably better to wait till the fall for an uplift in all these stocks.
And back to my first question, it's at least related, about this Federal Reserve bumping interest rates and the Bank of Canada laying out large hints that they may move faster or, before their timetable, which they've been setting for, a lot of consensus around the first half of next year, may be moved up. But I want to come to the bond market out of that. A lot of people owning that kind of fixed income. We've seen the bond yields drop again in the U.S., Maybe it's because of Trump's problems or whatever. But what's your take on just that big bull market that's been taking place in bonds, I think, arguably since 1982 even?
It's been a one-way bull market run since I've been working 30-plus years, and it's been a bull market in bonds that whole time. I don't understand why anybody's lending money to our governments with such a low return. So, but again, they're going to... We are strong believers interest rates are not going up materially for many, many years. So where is our interest rates going to go up 2, 3, 4%? I don't think so. So we're not too worried about it. Are they going to go up maybe, maybe 1%, 1.5%? I think they should. And I think in Canada, they have no choice. They talk about it out of the blue, but I don't think they necessarily want to do it, but I don't think they have much choice. The U.S. raises rates. I think our Canadian government has to raise rates, and I think they want to cool down the real estate market a little bit. I'm sure they're concerned, about the Vancouver and Toronto markets. If they're not concerned, they should be, right? So, increase rates a little bit just to calm things down. I think it makes sense.
That was always one of the great jokes, is everybody's running around, won't government do something about about the real estate prices in Toronto and Vancouver specifically, and you're sort of going, they already have. They've got rates at manipulated record lows, which has allowed prices to escalate. My gosh, talk about not looking at the fingerprints of who caused that challenge there.
Well, and I think the other sort of natural thing the government's going to do to cool off real estate prices is, of course, they're going to show up, knock on your door, and tell you that your house is worth 30% more, and then they're going to increase your taxes 30%. And I think that's going to be a bit of a sticker shock to people who've been living in their houses for 20 years and watch their and when you pay your property taxes, that's out of after-tax dollars. So it's a double taxation. It's expensive stuff.
Well, it's funny. You've hit on a subject that we've been chatting about on Money Talks. My theme is that, governments are desperate for money. And whatever reasons, you could say, look at the healthcare challenges with new technology and aging population, et cetera, et cetera. We've got a federal government, $28 billion in debt. You've got different provinces, whether, I talked a little bit about Ontario and their smoke and mirrors budget that says it's balanced, but it's adding $9 billion in debt this year, Alberta, et cetera. And I said, so governments, I think, are desperate for money. They look around, where is a big pool of capital that they can get a hold of? And I think primary personal residences are going to be under fire here. I can see them easily capping the amount of capital gains you're allowed to have, and just sort of encroaching taxation on that. I think they look at that and they're salivating, with what's happened in the real estate market. It's a big untapped pool of untaxed capital.
That's right. That's right.
Yeah.
And I think it would be better if they actually came out with some capital gains on home sales as opposed to capital gains on investment. Because there's just if they increase capital gains on our investments, this is going to do a lot to kill entrepreneurialism in this country, and we desperately need it. Whereas, as you say, right? Like Toronto's 30% richer than it was 18 months ago. Anybody who was lucky enough to have a home. So that's a huge creation of wealth, which is untaxed. I'm sure they're looking at it, right?
Interesting stuff. Paul Beatty is co-founder of BT Global BT Global Growth. Great stuff. You can find them at btglobal.ca. I'm going to come back. I'll ask Paul just to summarize for us, what are his themes that he's looking at right now, where growth opportunities, maybe even get us a couple of specific names right here on the Money Talks Network. Featuring the music of Jimi Hendrix. Did you know that, boy, by the time he was about 18, he was already playing in part of the backup band for the Isley Brothers. He played with Little Richard. But his whole career was about 4 years only, and it certainly had a monstrous impact on solo guitar playing. In his first, within months, in 1966, he went to London, was managed by the bassist of the group The Animals, Chaz Chandler. And the rest is the Jimi Hendrix legend. We're featuring him today, but right now I've got Paul Beatty on the line with me. He's the co-founder of BT Global Growth Fund. Hey, Paul, let's just summarize for people, specifically the areas you're looking at. You mentioned cannabis. Do you have any favorites in that sphere? You mentioned gold as something that we should be having a look at.
Yeah, I think, just in the cannabis, it makes it quite simple. I think the next wave that's going to come is going to be American companies likely coming to Canada for financing. And I think in the medical space in the U.S. at the state level, there's going to be big opportunities, and so we'll see if that happens. I think the rumor's out that the Toronto Venture Exchange is going to allow, companies with U.S. assets to list on their exchange. It hasn't been done yet, but we understand that's in the works. And I think if that happens, that'll be good that will encourage more people to do their IPO up here. And I think right now there's only one company that I know of. Ianthus is listed on the Candex exchange, the Canadian Stock Exchange, and the IAN is the symbol. We met with management again this week. We love that story. So they just announced they're going into New York State, which changed a whole bunch of laws regarding medical marijuana just over the last weekend, and I think that's very good. They gave out four or five new licenses. And Ianthus just went and bought one of those licenses for pretty much $30 million. I think they paid for it. And, they're going to allow you to deliver medical marijuana to your door in New York City. And I think that's going to be a good business. So they're in Boston, they're in New York, they're in Nevada, they're in Colorado. And I think it's a great company, not expensive, sub $100 million market cap, and very impressive management. So makes it simple. That's the only one we know of, and I think it's got a great future. So we're playing that. And
what are you looking at in the gold side? Yeah.
Well, the gold space, this whole Van Eck decides to rejig their own gold index that they create, and of course they run an ETF, GDX and GDXJ. The large cap, and then they call it the smaller mid cap gold names, the GDXJ. They decided there was so much demand for that ETF that in fact they needed bigger companies to invest in, so they expand the index to larger cap companies. Well, of course, if you expand the index, you're going to drop the percentage weighting of the existing companies in the index, and so everybody goes into a panic that, oh my gosh, that means tens of millions of shares of a whole bunch of gold companies therefore have to go down because there's going to be sort of forced selling. And we've been following this with utter fascination, and we came to the conclusion that this is a terrific opportunity because let's pick our favorite is Klondex. It's a terrific growth company. So they're in Nevada, they're in Manitoba. They have very little debt, good management, and it's a growth story. And by the way, it trades at, I think it's about 5 times cash flow. It's ridiculously inexpensive. So meanwhile, the stock falls 50% over the last couple of months, and a lot of it had to do with anticipation of this rebalancing. And then anyway, I think it's just way too much forced selling or anticipated forced selling. And anyway, they're rejigging the index, and who knows what their exact percentage is going to be. But the fact is, the stock is unique in that it's cheap and it's in North America. These things are all takeover candidates, right? The big gold companies need something to boost their reserves and their production and their cash flow. So, they're trading at 12, 13 times multiples minimum, right? All the big gold companies, and then here you have a chance to buy Klondex at 5, 6 times, and it's a growth company. I mean, it's extraordinary. So we're all in on that, and then out of the blue, another index group called the Russell 2000 decides they're going to rejig their much larger and index for mid cap companies in America. And guess what? Klondex is considered a mid cap gold play, and it's going into that index, which is 5 times more significant than being in the GDX. So all the people that anticipated the GDX, that percentage going down, and Klondex sort of missing out on 12 million shares of demand. Now the Russell's saying, well, it might actually be like 15 or 17 million in demand for the stock now. So I found it kind of ironic and the timing kind of curious, but still, it's a great company. It's ridiculously cheap, and I think this thing goes up quite a bit. Right?
I absolutely love hearing about it, hearing the stories, but I would also say one of the reasons that you get a fund manager like Paul is that they do all the research for you, and I don't want to overlook the fact that you can get the BT Global Fund, and they're doing this kind of thing, and for more information, go to btglobal.ca, btglobal.ca. Paul, once again, thank you so much for finding time for us. It's always terrific getting a chance to chat.
Thanks, Michael. Love your show, by the way. Keep it up.